should probably just real quick highlight Monty's success on Seeking Alpha, by the way, because you've been getting some shout outs from the editors over at Seeking Alpha for like being listed as like must reads.
Oh yeah.
And they keep track of your performance for your call outs, right?
They keep track of it. So if you go onto my profile on Seeking Alpha, it shows every recommendation I've made, you know, whether it's a buy, hold, sell, or strong buy, and the performance since the recommendation. If you do your homework and don't listen to the talking heads on the news or radio, you'll actually know it ain't that bad.
Yeah.
It's absolutely insane.
Yeah.
Like even for, you know, our automobiles or vehicles, they do not produce as much carbon as people would presume. Like same with nuclear, you know, you see a nuclear plant on the news, it's going to show literally water vapor rising, and they're being like, oh, that's actually pollution. It's like, it's not pollution, it's fucking water vapor.
Yeah. The public thinks that it's like the biggest solution, but when you talk to the brains of the industry, they don't seem really adamant.
Didn't they just shut down their last ESG portfolio too, if I remember correct?
Probably because they were afraid of getting sued, because I'm pretty sure they're close to getting sued.
Yeah, one of those big shops, they actually just closed down their last ESG portfolio. I mean, if you look at the cost and performance, you're paying what, like 1.5–2% just in fees alone for lackluster performance.
Welcome everyone to the Growth and Gains podcast. Today is a special episode. We have Monty here in person. Now, if we had an official studio, we weren't just sitting at home in office, of course, we'd probably each have a mic and be facing one another. But, hey, this is the next best thing that we're doing right now.
We're being resourceful, having a couple stoves, and being bros.
Yeah. So, Monty, this week we have no guest, but we still have some great guests coming up in the future. We both decided that what we would do, since Monty's been pumping out research, is we kind of showcase his Substack today and go over a few companies that have caught his interest. We'll be mostly focused on the energy sector. So, Monty, let me get up our resource here. Why don't you go ahead and kick us off with Chesapeake Energy?
Yeah, so this one has not been released yet. I was working all last night, getting the spreadsheet organized, getting my thoughts organized into a coherent, nice little letter for my subscribers to my Substack, which is the Peach Pit. And what came out, and this is dated October 17th, Reuters reported that Chesapeake has approached Southwestern Energy for a potential acquisition deal, which is absolutely huge. So Chesapeake Energy, they are like one of the wildest and craziest companies you would ever read about, given their history of being just like the ultimate wildcatter, going so heavily into debt during the shale revolution before just completely cratering, inevitably going through bankruptcy. Their ex-CEO, he guaranteed a lot of these loans personally. And just, I don't know how much of it is true, whether all the wild parties, all the cars, all that stuff that he was into that was publicized, I don't know if all that's true.
Like a huge party boy?
He was a party boy, man. Like, he was like a Texas party boy. It was nuts. But inevitably, he crashed his car into a barrier, whether that was purposeful or not, that's to be determined. But it had a crazy tragic end at the end. But anyway, so, you know, enough about the sob story about them. Chesapeake, they went through bankruptcy a couple years ago, reemerged, and they're a brand new company, nearly no leverage, and they are back in the acquisition business.
So wait, what's the time frame there? When was he in charge? When that?
I believe that was through 14 or 15, I want to say.
Okay.
Yeah,
right.
It was some years back. I mean, it was from like when he started the company up until, you know, about a decade ago.
Okay.
Yeah, so it's gone through some drastic changes since then. But, you know, the leverage aspect, buying up properties, that was kind of embedded into their culture.
Okay.
And after that all came tumbling down, just a complete restructuring on their core focus of business. And that's actually a big aspect to the company today. So if you read through the reports, they have a primary assets in the Haynesville, Bossier region, in the Appalachia region, up in the Marcellus, and they actually just finished selling off the rest of their Eagle Ford properties, and previously had sold off their Powder Basin or Powder River Basin properties about a year or so ago. So they're just completely getting out of the oil industry and sticking strictly to natural gas and natural gas liquids.
Okay.
So, and this is something I covered a little bit in a couple previous articles. So, about a couple weeks ago, I think 2 weeks ago, I released a publication on Comstock, and back in early June, I released a publication on Southwestern independently. And one of the big value drivers for each of these companies is their focus in the Haynesville. So one of the challenges with the Haynesville is it's significantly more expensive for drilling and completion operations than the Appalachia region. It's just, harder to get down there, more shit you got to drill through to get to the liquid gold there, or I guess the gassy gold. But what the Haynesville Bossier region has that the Appalachia region doesn't is, the number one fundamental to real estate: location, location, location. They are like directly aligned with where all these export terminals, all these LNG export terminals are built and actively being built out. And, that's a monster of a value driver. So
Yeah.
domestically, natural gas goes for what, like, I think it was back under $3 per BTU. Let me pull my note up real quick. I have that. Yeah, it's kind of hovering around $3, just under $3 per BTU. And then, one of the things that Chesapeake is bringing to the table is they recently signed a contract with it's a 15-year agreement to supply LNG, and they're using the Japanese spot market to index their natural gas.
Why is that?
So the Japanese market is priced at $18 per BTU.
Oh, okay.
So there's a huge international dispersion on pricing.
That's massive. Okay.
Oh yeah, and I was looking at European prices as well. The Northwest price for Europe, it's about $16. You just have these monster differences in natural gas prices, and I believe it was Goering and Rosenzweig or possibly Doomberg that brought this up not too long ago. But there could potentially be kind of each side kind of meets in the middle on pricing, to where our gas prices are going to increase and Europe's TTF and Japanese gas prices are going to decrease to kind of meet at some median pricing range.
Is that pricing just for, is there a differentiation between the liquid and then just in the gas form?
So LNG, so natural gas.
Well, liquid is LNG means liquid natural gas.
Yeah. So
for
to help the
listeners.
listeners that don't know,
Yeah.
LNG is liquefied natural gas. So essentially, you're freezing the gas to be able to transport it overseas. It's more compressed. It's easier to ship. It's more explosive. But these are some monster tankers that are bringing this gas over across the sea. So it's easier, cheaper to do it that way. Typically, there's a handful of companies, independent companies that do it. There's, a few that, I guess, midstream and sorry, I'm just completely drawing a blank right now.
Okay.
There's a few midstream companies as well as integrated oil and gas companies that have export terminals. So like Exxon is currently teaming up with Qatar Energy in the Gulf Coast to build the Golden Pass export terminal. And let me double check and see what that capacity was going to be. It was going to be some good volume transporting over that export terminal. But let me see if I have my notes somewhere on that. Sorry, this has been about a week since I made that note so it's not super fresh. But anyway, so there's just a ton of capacity that's going to be coming online through 2027 and even further as I guess internationally the demand for natural gas is going to continue to increase despite what a lot of these European politicians are suggesting. You know, renewables are great, but natural gas is significantly better.
Yeah.
And in turn, as we'll discuss in a future show, nuclear is even better than that. But anyways, getting back to natural gas, so there is a ton of capacity being brought online for these export terminals in the Haynesville-Bossier region. It's just super convenient to transport natural gas from the basin all the way down to Houston, to Louisiana, Houston, to where all these export terminals are located. Oh, here we go. I found my note on the export. So the Golden Pass terminal is set to come out at the end of 2024, and the excess capacity after Exxon fills their volumes is going to be 3.2 billion cubic feet per day of additional capacity.
Okay.
Which, I mean, it's not a whole lot if you think about the total volumes that these guys produce, but
Yeah.
it is a significant amount of gas
Yeah.
that's going to be going through those channels. So there's a lot of volume to be brought out, and this is just like, you know, the tip of the iceberg for capacity. I mean, there's going to be like something like 40 metric tons per annum, or million tons per annum, that are going to come online over the next decade. So it's, you know, we're just getting started on our export capacity.
Okay.
And as that builds out, the Haynesville-Bossier Basin is just going to become that more value rich. So there's a lot of opportunity in that region. And Southwestern, they've spent a significant amount of money in the last year developing that basin. Traditionally, they were more up in the Appalachia region. This last year or so, they just invested $1 billion+, or I think it was close to $2 billion, in the Haynesville area just to develop the property.
So how does this make sense for Chesapeake?
So, it pretty much just adds all this capacity to Chesapeake's war chest, you know? And right now we're going through kind of a consolidation period too. So Exxon's recent announced acquisition of Pioneer, I mean, I believe it's still awaiting approval, but they finally got through negotiations with Pioneer on a price. Now they just need to go through the approval process to execute this acquisition. But similar to that, you know, two big gas giants that, you know, they've had kind of a teeter-tottering history of profitability and leverage. So, you know, this will allow them to consolidate, have a bigger, I guess, a bigger play that they can work with, and have a little bit more control of the market.
Okay.
Yeah. So I think it could be a good value play. So it's kind of like essentially the bigger the E&P, the more power they have over the oil field services, to where, you know, they can control the amount of wells that are online, and in turn they can control the amount of rigs that they need. So, you know, if you can drill like 10 wells for one rig, you know, why separate that into two companies, 5 and 5, and 2 rigs, when you can just have one rig drilling those 10, and then you can, you know, segment out to different areas of the basin as you go along, instead of two competitors, you know, just drilling all your individual wells at the same time.
You're right. Right. Okay, that makes a lot of sense. Okay. So, as where Chesapeake stock stands, wait, how are they paying for this? Are they doing a stock deal, cash deal? What is the split? Or
So I haven't seen any announcements on that yet. I believe this is just a rumor or preliminary talks between the two firms, but I don't believe Chesapeake will finance this deal through debt. Depending on, I mean, it all comes down to how much are they going to be spending on this deal, on this
Okay.
acquisition. But They do have a significant amount of liquidity, especially through their sale of their Eagle Ford properties. I mean, let me
So I actually wasn't perfectly following them because I thought that this was pretty much a done deal, but this is still like could potentially not go through.
I mean, it's preliminary talk, so it could or could not, but
Okay.
yeah. So in total, Chesapeake has $3.5 billion in liquidity that they can spend. So I mean, they're gonna be spending some bucks on this, but you know, just given the acquisition of this additional gas reserve, I think it would absolutely be a win-win for each company. Now, I pitched this stock as a pair trade. Then my recommendation for Southwestern would be go long the shares. So there's, you can kind of play this in that way. You can go long one or short the other, or pair the trade together in anticipation of the deal going through. I mean, obviously, if the deal doesn't go through, this trade is busted, but at the same time, they still hold a lot of good shareholder value.
So you think if it goes through, Chesapeake will likely come back down then?
Mm-hmm. I mean, overall, just compared to the total market, they are still trading significantly cheap.
So during those wild years, was this a private company?
Chesapeake?
Yeah, or are they one of those few
no,
that have...
So this was a complete recap since the bankruptcy. So it's going to be more challenging to find historical information on them. If you look at just the stock chart services and stuff like that, just because they had kind of like a gap year during that bankruptcy period.
Okay.
Yeah.
Yeah. All right.
But no, they've been public for a very, very long time. I mean, they've essentially been in distress for a decade plus before they inevitably went bankrupt. They've been they've been through the ringer. I mean, they were like I don't want to equate them to how Enron was, but they were, for their generation of energy, they were the Wall Street darling.
Okay.
They were closing debt deals,
so
debt
that helps
raises,
pay
all sorts of stuff.
Yeah.
And, they were like the Chads of Wall Street.
The Chads of Wall Street. That's such a accurate. Yeah, I mean this graph at a glance looks really interesting. Actually.
Yeah, and given that they've been selling off their oil assets in the last year plus, it's going to be more heavily weighted on natural gas prices going forward. Looking at the futures prices on CME, natural gas, it looks like it's gonna be kind of in the $3 range ish throughout the next year. Just looking at futures, it's not going to touch up on $4 until December, so it's gonna stay. I mean, it's still elevated compared to this last year. Don't get me wrong, but you're not going to see those intense prices that we saw in 2022 when Russia invaded Ukraine and we shot up to $8, $9 per MCF. We're not going to see those kinds of prices, at least until maybe more LNG capacity comes online, or export capacity, comes online, and then we'll see some price consolidation or something like that, to where our domestic prices will go up, international might come back down. It's hard to tell because natural gas, oil, it's very heavily affected by exogenous activities like an invasion, like the Hamas deal in Israel that kind of shocked the oil market briefly. Just stuff like that. The oil market's just so sensitive to outside events.
Right. That maybe we should talk about that a little bit later on. Even do you have any? Well, I mean, do you have any thoughts on that you really want to even get into besides watch oil?
Yeah, just keep an eye on oil prices. Keep an eye on supply and demand dispersions. We're seeing a very consistent story on oil right now.
Yeah.
To where, producers are continuing to meet demand with supply. They're not trying to, capture market share and overproduce like they historically have been. And, the market's reacted. Oil prices have stayed in the mid to high 70s to 80s per barrel. And, if they keep the same story going for years to come, they can see good profitability. They can see, continuation of these appealing prices. And, one of the values, and, Chesapeake also brought this to the table too when they emerged from their bankruptcy, but one of the values that a lot of these firms have is that, this is more of the independents and less the IOCs, the integrated oil companies, is that they implemented a fixed plus variable dividend in which they pay maybe a lower fixed dividend that doesn't need to be adjusted as often. They're not gonna have to raise or lower, or more so lower, their dividend based on price swings or profitability swings that are seen in the industry over time. But more so, they'll keep the fixed dividend just steady, stable, maybe grow it by a couple % a year as they see more stability in the market. But the variable dividend, that's a swing dividend, that reflects profitability, that reflects their free cash flow. Do we have a really good quarter? Like net of acquisitions, net of paying off debt, things like that. Do we have a really good quarter? Do we have excess cash that we can return to shareholders? And typically, they'll reward the shareholders.
Yeah.
And it's worked out, it's gone according to plan. Sure, the variable dividend has come down since 2021 for a lot of these firms, but that's exactly why they set out to have the variable dividend. It's supposed to adjust with free cash flow. That's expected.
Yeah.
I mean, share prices, sure, those have reflected the change in dividend, in the dividend rate, but at the same time, if you had a good buying price, just hang on to it, take your cash, and ride it out for the long term.
Okay. All right. Well, and going back a little bit to the, the Middle Eastern things, I gave some comments on my main YouTube channel. So if you just want to hear about that, you can head over there. But I don't really want to get into it too much. I do want to. Do you think we're good to kind of transition over to some nuclear?
Yeah, absolutely.
Yeah. So you had written up a article. Was this one out yet?
This one is only out on Seeking Alpha. I will be releasing it on my Substack. What day is it? Today's Sunday.
Right.
So I've been kind of reconfiguring how I release content on my Substack. And every Tuesday and every Friday, I'll release new content, new article for viewers to read. And intermittently, I might release some additional thoughts, some notes, or something of value, just depending on.
And we should probably just real quick highlight Monty's success on Seeking Alpha, by the way, because you've been getting some shout outs from the editors over at Seeking Alpha for being listed as must reads.
Oh, yeah.
And they keep track of your performance for your call-outs, right?
They keep track of it. So if you go onto my profile on Seeking Alpha, it shows every recommendation I've made, whether it's a buy, hold, sell, or strong buy, and the performance since the recommendation. And if, I write about the stock more than once, so I did a re-release of my analysis of Hudson Technologies, which I highly recommend reading. It's a very good, detailed analysis on the refrigerant industry, which, I had no idea existed before I looked at them. It's like, all right, there's some fluid in my fridge or air conditioning unit. That's so at the back of my mind that I wouldn't think this is a whole industry of, bringing refrigerants to the buildings, bringing the old used refrigerant back, recycling it, and distributing it out again. I didn't realize that was a whole ass industry. But what's great about Seeking Alpha is that when I do an update article like that, it not only shows the original timestamp on my investment thesis, but it also shows the new one, both on the same chart, so you can see where my recommendation has changed at the exact same time.
Ah, that's nice.
Oh yeah, so I can't, BS it and manipulate it. You get the real deal. You're knowing exactly where it is, when it is, what it is. I can't change it. This is fixed on their website, which I absolutely love.
Yeah. And so yeah. That keeps you honest and it keeps it open. I'm a big fan of that.
Absolutely, and that's the drive of the Peach Pit. That's why I wanted to go independent and release content to anybody of interest. I want to bring a very honest, thorough, well-researched opinion to the market for both institutional and average readers.
Right.
A lot of times, and not to knock on Wall Street, but a lot of times there's ulterior motives in there. There's relationships that need to be well kept. And with the Peach Pit, I don't have advertisers. I don't have someone to answer to. This is all on me and my name. So you're getting the real deal. You're getting exactly what I think, why I think it, and, my basis for analysis. I'm not just spewing out bullshit. This is the real hardcore analysis. Whether it's a long or a short position, you're going to know the real story behind it. You're going to see all the research. I'll show you all the sources on where I found the information, everything about it.
Wow. That does not mean that we're not opposed to advertisers. But
yeah, still, if you want to advertise, that's great. But that doesn't mean I'm going to give you any benefit. One of my buddies at Nordson, he wanted me to look at his company. I wrote a short recommendation on it, sent it to him. He actually really liked the article. He said, this is actually, so for the record, I have no insider information. We have not discussed anything about the company, what they do, how they're working, anything internally before actually ever. But so my writing of it was completely independent of anything that he knows. I have not had any discussions with him on any internal operations ever. So just to square that away. But since writing the article, I sent it to him, said, hey, this is what I came up with. What are your thoughts? He's like, yeah, that's some stuff we've been talking about internally. And
that's awesome.
Asked if he could send it around the shop and get some additional opinions. So it's like, oh, damn. All right.
That's funny.
So I do my homework very thoroughly. It's the full analysis. I'm not just gonna write a good buy piece because you're my buddy. I'm gonna give you the honest truth no matter what.
I have to have you do one on Nobel Trading.
All right, you're gonna send me all your trades and performance, buddy. We're doing some hardcore. You can't cherry pick here.
Yeah.
I want your losers.
I share all my losers for the record.
Yeah, he does a good job at sharing the losers.
Yeah. I don't hide anything. I think it's very important because that's part of the learning process. You need to share those because people need to understand how to handle their losers because that's kind of the key to success, anyways. Is that risk management. But all right, that was a fun detour. But let's go ahead and dive into Deep Yellow Limited.
Deep Yellow Limited. So they are an up-and-comer. They are a junior miner, primarily in the nuclear space. That's U308. I learned that the other day while researching them.
Wait. So say it again.
U308.
Okay.
That's uranium. But, sorry, I wanted to show off that I learned a little bit about the periodic table in the last couple weeks. Not to discredit anything about me, but I was an economics major. I took chemistry for non-science majors, which is basically a class you sleep in, take a couple tests and get an A. But anyways, so
Gen Chem?
Gen Chem.
Yeah.
I guess that's what it's called, but
yeah.
If you want science stuff, talk to Josh. I am not any of that shit. But anyways, so Deep Yellow Limited, they're in the business of exploring and developing some properties, primarily in, is it pronounced Namibia? South Africa.
Okay.
So they're exploring properties in South Africa as well as Australia for the exploration and development of uranium. So they currently have a couple projects that are in the development phases. Nothing has been approved for actual extraction of uranium. They're still exploring how mineral rich these properties actually are. So as of this writing, and this is actively being changed and updated, they have about 428 million pounds of uranium reserves on across their multiple projects in these two areas.
3.8 million?
428.
400.
428. So they boast about this too on their investor presentation, that they have one of the biggest uranium reserves out of every mining company out there for uranium. Like,
Wow.
if not, they have the biggest.
Okay, and real quick, where's this company based?
They're based in Australia.
Australia, okay.
Yes, and they do trade on the Nasdaq, ticker DYLLF, DILF.
Wait, really?
Yep, that is their ticker.
All right.
So, of course, being a junior miner, they're not making any money yet. They are setting out to break ground and actually start their production phase out in 2026. Now, they have been consistently updating their figures as they, drill more test holes, as they further their analysis of what minerals are, actually on these plots of land. They've been pushing back their official, mineral reports to, properly value these properties. So, with the SEC, with, their equivalent in Australia, I believe they're under IFRS, you have to report your minerals.
Can you further explain IFRS for listeners, viewers?
So IFRS is the international equivalent to GAAP reporting. So GAAP is just in the United States, it's generally accepted accounting principles, which is a standardized way of reporting your financials from your operating statement, your cash flow statement, and your balance sheet. So it's just a very straightforward, basic, standardized financial report.
Okay.
And for minerals companies, they have to, and this is primarily oil and gas as well, they have to report a special report, which essentially states the value and what they actually have under the ground. Their reserves, their known reserves, their proven, unproven, probable reserves, everything in between.
Okay.
So yeah, being an international company, they report under IFRS as opposed to GAAP, which, for those that are interested in accounting, whether you're a CPA, you have your CFA charter, whatever it is, there's this kind of consolidation between the two to where GAAP accounting is moving more and more towards IFRS. Just for the IFRS, it's a little bit less rigid, and there's a couple things that I like and don't like about IFRS that GAAP has or doesn't have. So IFRS allows you to restate written down assets as opposed to GAAP, which doesn't. So once you write down, a fixed asset on GAAP, it is stuck at that value forever until it gets sold. Once it's sold, you take the dispersion between book value and the selling price, that's your profit on the asset, which you get taxed on the excess profits. Whereas IFRS, you can bring back some value on the reported statement and kind of, fudge it around that way. It's kind of good and bad. So just to kind of take a sidestep, I know I'm kind of derailing our conversation on nuclear, but in the last decade, since oil kind of went into the shitter from, the high 80s, 90s, hundreds back in 14 down to $30 a barrel, and then kind of did it again in 2019. Exxon was very much holding out on restating their assets, just given that, oil prices, they always go through booms and bust cycles. 2008, 2015, 2019, we may have one in the future. Looking at the industry, we may not, but you just never know. So they were hesitant on restating their financials just so they can maintain the asset value of those properties.
Okay.
Yeah. So there's some differences in GAAP and IFRS, and it seems that we're moving more towards IFRS, at least according to the CFA study material. So, who knows? But anyways,
Which is a pretty good, pretty good baseline to set a hypothesis.
we're nerding out here, guys.
Yeah.
But yeah, so looking at Deep Yellow, there were some interesting figures on them to where there are currently 438 active nuclear reactors in the world right now, just running, pumping out energy. And
does that include submarines?
Probably not. These are energy producing reactors. So these yeah, these are the power plants that you're gonna, drive across if you're watching The Simpsons. And there are 59. Sorry, I could not help myself.
Yeah.
I mean, you can go up and down 3 Mile Island and see the wreckage there or whatever, or look up pictures of 3 Mile Island, Fukushima, Chernobyl, if you watch that documentary. And that was actually a preface on my article to where, the political outlook for nuclear has significantly changed since those events, to where the public perception of nuclear is that it's a dangerous fuel to produce.
Yes.
Just given those few isolated incidents.
Well, and not even that, but like, there's still in pop culture, and there's a new Netflix show called The Dark. And me and my girl were watching it, and it's based, I want to say it's a Polish show. Maybe it's a Swedish show. It's European for sure, but it's one of those, they have the dub version for English viewers, right?
Do you watch subs or dubs?
The villains, what?
Do you watch subs or dubs?
The dubs.
Okay.
Yeah.
I like
know.
Subs.
Probably, yeah.
Or I like dubs.
Yeah, I mean, Netflix. Yeah, I mean, actually, Netflix probably does give you the option, but I watch dubs. But, just because I had to watch. All right, I'm gonna get too derailed. I had to watch dubs because usually if I'm watching something, I'm also doing something else.
Oh yeah.
And that's why I don't live stream a lot when I'm trading, because I'm usually doing a few different things while I watch the market, just because my ADD brain is more focused when I'm multitasking. So which won't make sense to most people to think I'm not paying attention, but it's just what works. So I have to do dubs because I'm not sitting there reading that. I'm letting it play and just while I work on other stuff.
I like both,
99% of the time, yeah.
I like both because you can see the translation differences.
Yeah. Okay, that's fair. Yeah. I mean, sometimes that throws me off though, because Netflix.
Oh, it so does.
Netflix is really bad.
It gets really bad.
Yeah, it gets really bad. Okay, but anyways. On that show, that European show, the evil villains, and I believe the show is relatively popular over there, not so much here, but over there the villains are the nuclear reactor executives. Instead of the big oil villain, it's big nuclear villain,
big nuclear.
which is hilarious to me because it's not like these companies have the same capital even that these oil companies do, or the same amount of pull. And in fact, they're often, kind of like the beaten stepchilds of energy, despite being the fact that they should be treated like the prodigal children, and we still demify, is that a word?
Demonize.
There we go. Demonize these these great companies that are trying to do great things. Yeah, but talk about the pop culture. That is one that just came out, and Chernobyl was an amazing show. But I definitely don't think it does any favors to getting... That was the
HBO miniseries, right?
Right.
Yeah.
I don't think it does any favors to getting people on board with the way that this technology has improved since the 70s, because people see that and think, that's what it's still like today. Mm-hmm. And when I was watching this show called The Dark, I was enjoying it for what it was. It kind of seemed like a Stephen King knockoff. But...
it's nuts.
It was still wow, this is really not updated to reality though, on how this technology is and how safe it truly is. And
oh yeah. No, it's absolutely bonkers. Just the public perception. If you look at Fukushima, GE I believe were the contractors on speccing out the build, and inevitably caused the meltdown wasn't necessarily the original spec. It was because the people that actually built it out and were building out the plant, they put the backup generators. They didn't follow GE's guidance and elevate the backup generators. They put them below sea level, and when the fucking tidal wave came through, it flooded the backup generators, and you had just a complete meltdown due to their incompetence. It's like, follow the specs, in the United States, and this goes into oil and gas, this goes into, coal, a lot of these publicly perceived dirty industries, to where we are literally one of the most heavily regulated countries when it comes down to energy production. Like, the amount of carbon that's released from a coal power plant, from oil and gas, the amount of methane that's leaked from pipelines and wells, it's like, it is not at all what the public perceives it to be. Like, it is such a minuscule fraction of how people perceive these industries. It's like, you've got to be shitting me, man. Like, if you do your homework and don't listen to the talking heads on the news or radio, you'll actually know it ain't that bad.
Yeah.
It's absolutely insane.
Yeah.
Like, even for, our automobiles, our vehicles, they do not produce as much carbon as people would presume. Like, same with nuclear. You see a nuclear plant on the news, it's going to show literally water vapor rising, and they'll be like, oh, that's actually pollution. It's like, it's not pollution, it's fucking water vapor.
Yeah.
You literally have a sun that needs to be actively cooled with water.
Yeah.
It's going to cause water vapor. I mean, a lot of that water is recycled through pipes, but, you're going to have some release. And it's, I don't know, it's just such a negative perception that, these industries have in the public. And, it seems like the tide's turning, though, including in Europe. So, in researching Deep Yellow, I was looking at, a couple things on the industry. So, Europe, they were recently going through kind of like an analysis on the future of energy for the European bloc. And what I found was that just the tide had kind of turned. They are now including nuclear on their future development of energy. And, they're letting France keep those, nuclear plants running. EDF, who is the utility that runs those nuclear plants, if nuclear weren't to be a part of that deal, there were going to be talks of, hey, you guys have to sell out of nuclear plants or we can't coordinate with you anymore. Like, just crappy politics, man.
Yeah.
It's egregious. And, I have a lot to say on this ESG stuff. I'm not going to say it now. I don't want to start a fight. But I do have such a negative outlook on solar, on wind.
You would start a fight with me. I talked about it plenty. We'll get Tony Greer on again, and we'll just have a field day.
Oh, yeah.
Of shit talk.
Let's just get all the energy guys on. Let's get Doomberg on. Let's get Tony on. Let's get all the guys.
We could probably get them on the same podcast together.
That would be so exciting, man. We can get the, what's his name from Macro Voices on. I just love listening to him every week at the gym. He does such a good job on the energy outlook, and he's voiced. I don't mean to broadcast another podcast here, but he's very big into nuclear, and he went full on a couple weeks ago. Like, just, I don't want to say he had a meltdown, but speaking of nuclear, but he just went hardcore on, hey, I have a calling in life, and that is to help with the transition into nuclear. He is actively looking to either start a company, be brought on with a company, consult, whatever it may be, to, essentially bring nuclear to the forefront of our energy production on a global basis or a countrywide basis, whatever it may be. He's like, yeah, that's my calling. This is what I'm going to do, and I'm going to set out to do it. It's like, he's got a freaking action plan, man. It's
Yeah.
like this guy. I think he said he's
That's
retired.
a real deal, man.
Oh yeah.
I was trying to do that for a little bit, building up the social medias, but you don't get a lot of attention for it. So, kind of gotta strategize to like, because I want to spread good messages and solid thinking, but you kind of have to mix that in with some stuff that'll actually get attention.
And that's
to
what
build the following, and then after you do that, kind of knowledge dump on a larger audience to, to get the message out there. But yeah,
and that's how he started. But he
Yeah.
turned that tide, and he's now actively implementing it.
That's awesome.
It's like, all right, he's putting some bang behind his words.
Something to aspire to.
Exactly. Maybe one day we'll be at that level. But no, so back to nuclear. We keep derailing here. But yeah, so just, some basic research on nuclear. It appears that we're kind of at this supply dispersion to where active mines are only producing about 74% of the uranium that is necessary to continue powering these nuclear plants. So that kind of adds some fuel to the flame for Deep Yellow and further developing their mines and getting them ready for production. And that's kind of why you've been seeing, if you want to pull up the chart for uranium, the price chart, if we can get to it here, but that's why you've been seeing uranium prices.
What would the ticker be for that?
I don't know. I usually just use Trading Economics price chart.
Uranium spot price.
But yeah, it's ever since Fukushima, it was upwards of $100-something per pound. Went down to like in the 20s or something for the longest time. Yeah, pull that out by a couple years. Give us the 10-year chart to get a bigger picture. Yeah, it's been pretty suppressed in the 20s, 30s for the last decade, and now it's making a comeback. It's priced, what's that, 69?
Yeah,
right on the dot. Nice. So it's just made this huge comeback, and pricing Deep Yellow's mines and production. So just to get into their production forecast, they're looking to actually start mining and bringing uranium from the mines to refining in 2026. That's when they are looking to begin this. And then, it's going to be starting slow, around 1.5 million pounds, going up to 3 the following year, up to 5.5, and so on and so forth. So they're going to be slowly ramping up their production over time before, really getting to that impactful inflection point in production. But no, on a valuation standpoint, I mean, they're still a junior miner. Management, they do have a deep bench. So their current CEO, he has 30 plus years in the industry. He started his own company back in '93, brought them from a junior miner up to a tier 1 uranium miner. Their chairman, non-executive chairman, similar story, worked for Rio Tinto, one of the big mining companies in Australia, for 30 plus years. And they just have a really deep background in the uranium industry, in the mining industry, in the energy industry. So, if I had to put my cards on somebody that could do it again, it would be them. It's like the Lorenzo from Cleveland Cliffs. It's like, I guess, the Australian version of him. And that was the guy from Deep Yellow. That was the short video I sent you from their call.
Oh, that was him?
That was him.
Who made the it was
just a funny, crude comment.
Yeah.
That's how you know he's real and genuine.
Yeah. That was a funny comment that he made, yeah.
Oh, yeah. Yeah, we can, I'll have to find the quote and maybe we'll share it, maybe not. That might be a little bit raunchy for us, but...
I can clip it in if you want.
You can clip it in, yeah.
I can clip it in.
Oh, that'd be great. Yeah, clip that in.
They'll see it right here.
I'll send you the video so you can actually pull it from the actual video instead of my phone camera. get the good stuff.
Yeah.
But yeah, so they have a deep executive bench, you know, ex-bankers in the energy industry, a lot of people that have a lot of experience in energy and uranium. So, you know, on a speculative basis, going from junior miner to tier one, typically I'd be a little bit more cautious on making investment recommendation on that, just because a lot of these projects tend to get pushed back, whether it's from continuous development of the mines and analysis of the mines, or, you know, some political rationale, you know. So like domestically, there's been talks about mining lithium, and those just get pushed back and pushed back. And I know in California, I don't remember who it was that was trying to mine lithium, but they were basically told no for one reason or another. I have my own rationale as to why we're not mining a lot of these metals domestically, and it's more that story of United States being very imperialistic. We're going to hold our war chest close to the chest until we really need it, and then develop those resources. But, you know, New World Order's for a different day.
When we have Marlo on, which if you're not in the Discord, you're not going to know who that is, but he's one of our, one of the most OG members of the Discord, who's one of our CFAs. We got a bunch of members who are getting their CFAs, or working on it, or at least doing the studying, which is cool.
And just to clarify, it's a CFA charter. We're going to present it according to how the CFA institution wants us to present it.
Yeah.
Not to be a nerd.
But,
yeah.
When we have him on, we'll go deep, because he is way into all of that. Of course, he still works for an institution. He's not independent like us, so he will probably come on anonymously, which is why we call him Marlo, because it's not his actual name. So. Which
is okay. We had Doomberg on. I don't know his name. Apparently, people in the industry do. So, if you know him, don't tell anybody.
I hunted.
You hunted?
I hunted. I found his name.
Oh, let's not out him on our podcast.
Yeah.
We're going to respect him. I like him. I enjoyed our conversation. I'd love to have him back on our show.
Yeah.
We'll, you know, maintain that respect and not get his name out there.
Oh, yeah, for sure.
Absolutely. But he's a big nuclear guy, too. He'd be great, you know, a future podcast to talk about nuclear energy a little bit more diligently.
What I want to talk to you about was a comment that Tony Greer made, and I don't think we had any opinions when he brought it up. I try not to get too argumentative with any of the guests. I think I just want to hear their perspectives, whether or not I agree or not or disagree. I'm always more prone to, you know, putting them on the pedestal and letting them have their time to speak. But when Tony Greer came out and said that he believes that as more participants enter into the uranium space, that we will likely see prices start to alleviate, and he doesn't see it as a good investment. Like, do you think that only plays out over a 20-year time horizon, that starts to level out, and in the short term there still is room for good investments, and maybe even some price squeezes? As you said, there is only 74% of the demand being met right now. Is that correct?
Yeah.
So
I mean, it's the same rationale as you do with oil, to you know, add some perspective to it. Uranium, oil, there's a lot of nation state companies that, you know, drill and mine for these materials. So it, you know, there's some motive in, you know, whether it's funding social programs or, you know, as a private company, returning cash to shareholders and being profitable. So there's different motives behind production volumes, but you know, depending on how production occurs, you know, if they do what the energy industry, what the oil and gas, this is actually, I'm not going to limit it to oil and gas, because it has happened across other commodities too. I think it was Olin no, it wasn't Olin, it was oh man, who was it? It wasn't Dow Chemicals. It was one of the chemical companies. They make chlorine and chlorine and epoxy from soda ash. And so those two have kind of like a push and pull, where historically the industry has been if chlorine is well priced, we're going to produce based on the price of chlorine, or if epoxy is well priced, we're going to produce based on the price of epoxy. To where if one was up and one was just super suppressed, that was the economics behind it. Now what's changed is that we're just going to produce given this equation, and no matter what, we're going to stick to it. And that has just 180 the entire industry. You know, Pioneer Energy did it for the oil and gas industry. We're not going to produce to take market share, we're going to produce to meet demand and try to keep the commodity prices higher. So whenever we talk inflation, I have this in mind. I don't have the monetary policy in mind. I have purely on a base material, on a commodities perspective. You know, there are just broadly, if you look at the Bloomberg BCom index, the Bloomberg Commodity Index, you will see that, sure, it's trailed down a little bit in the last year, but it's still relatively elevated on a historical basis.
Yeah.
And that's just industry-wide. It's, you know, sector-wide. It's something that's broadly being done. And if nuclear miners can successfully do the same, then we can see elevated nuclear or uranium prices. You know, again, since Fukushima, prices went down to the 20s, 30s, and took until this last year to get back up to, you know, the high 60s. So, you know, if we have responsible miners, if they stick to their corner of the market and produce to meet demand and don't produce to oversupply and flood the market, we can see a good pricing mechanism in there. And in turn, they will be more profitable, you know. It's basic economics. If you can yield more cash flow on less production, you know, one, net of fixed costs, that lowers your average cost per unit, and you know, you just expand the bottom line from there. It's basic economics. I mean, there's more that goes into it, of course, but you know, just in a very high level, basic understanding, it doesn't make sense to flood the market and suppress the prices just to get that little bit more of market share.
Right.
I mean, unless you're just going to pull Russia, OPEC, and try to have a pissing contest to bankrupt everybody else, but
which, I mean,
that was the 2019 oil crash, but you know, that's a different story.
But we're talking about the difference, I think, and I mean, I did a video series before we even knew each other. Back in 2020, I think, is when I pumped those videos out. If you go way back on my channel, before I had this set up, I had the office somewhere else, and I didn't even know if I had the sound equipment or anything. When I first started making videos, I did some big deep dives on uranium and CCJ, Canadian uranium company, and I covered the shipments that goes behind the supply chain issues that can occur with uranium if it receives any disruption whatsoever. It's a 2-year supply chain to go from the mining company to the utility company for most of them, with a multi-step process that takes forever. So anytime you disrupt that, you know, and when you also look over the contracts and how they're developed, like, there's a huge difference between this industry and I feel like the other energy industries, because a lot of these utility companies are ordering access of what they need, because if something disrupts in the supply chain, they need like 2 years worth of access supplies on hand, and to access to keep, because you don't want, you know, the nuclear reactor shut down. So it makes it very different. And in 2020, when all the supply chains were disrupted, you know, watching what these companies like DBL Limited do, like CCJ in particular, one of the, like, that was like a fantastic trade that year for me, was buying call options when I saw them buying up futures contracts. And I'm like, oh, with the mining companies buying up futures contracts, something's awry. And sure enough, it led to quite the price squeeze in uranium. And I was playing with a bunch of tickers. Deep Yellow's one that's never hit my radar, though. So this is interesting. But I just wanted to throw that out there, too, for the differentiation between nuclear and just the complexities that exist within that supply chain and getting it from the mining company to the utility company make it a lot more, I feel, volatile.
Yeah.
And I mean, I even think that was kind of shown too in this chart. I mean, this looks so much more volatile than what you see in oil. And actually, can you provide any clarity to what we're seeing here in 2007?
Yeah, I believe that was pre-Fukushima, right?
Oh, is that what that is?
Yeah, I believe that was around then.
And then Fukushima blows up. They have a bunch of access that enters the market, brings the prices back down. But I'm pretty sure by 2020 that should over this time and we're actually covering this up for viewers, but over this period of time, I'm pretty sure that excess reserves from Fukushima has pretty much dried up, hasn't it?
Yeah, and it wasn't necessarily just excess reserves too. It's also, where's the nuclear industry going from here?
Are we going to be, true. Okay,
is it something
everyone's
that's
kind of panics,
used, or is it going to be phased out because it's dangerous? So it's very much a industry that's based on public perception.
Yeah.
That's based on politics at the time, and one accident, as you can see from Fukushima, can ripple through the entire industry as a whole. So, backing up to the total amount of nuclear plants that are out there. Like I said, there's 438 active reactors out there. And then, to get a little bit more into it, there's 59 that are under construction. There's 104 that are currently planned and 341 that are proposed.
Did you break down where demographically most of those are?
I didn't in my article.
I think last time I looked, almost at least over 50% of those are all in Asia.
Yeah, there's a significant amount in Asia and Europe.
Okay.
There's 90 something in the United States, down from 100. I think it was 116 or something like that. Low hundreds in the United States. And then I don't know how much you know about modular reactors, or what are they called, mini reactors or micro reactors?
It's limited. I'm aware that they exist. I've also done some research in thorium and stuff like that, and different uranium alternatives, and also the underfeeding processes. But that's all the knowledge I have.
Okay, sorry, it was 112 at its peak in 91 in the United States.
Okay.
But, nuclear still accounts for something like 18% of the United States' energy production. So it's still a pretty big aspect to energy production in the U.S.
Yeah.
But, so I did take a couple notes on modular and micro reactors. Those are still kind of in the development phases. So the first modular reactors were actually approved to begin construction and implementation just this last couple weeks. But a modular reactor that's going to produce somewhere between 200 and 300 megawatts, and a micro reactor somewhere between 5 and 40 megawatts. So these are, smaller, I don't want to say backyard reactors, but, something you can put.
Well, isn't the if you go way back on my channel, before we started doing the podcast together, one of the earliest episodes of this podcast was with two electrical engineers. They're both design engineers. I think one of them works at Ameren, which is actually here in the Midwest, and then another one works on the East Coast. And they were talking about a lot of the utility companies are looking towards the potential of creating more microgrids.
Mm-hmm.
And that's where those mini nuclear reactors could be really helpful, where one reactor powers 15 subdivisions or one city, and then localize all the power distribution and then supplement some of that maybe with the solar panels or stuff like that. Although when you talk to a lot of these design engineers, they're not big fans of the solar panels.
Dude, nobody is.
Because it's not standardized at all. It's a fucking mess. And so they're not, they're, and the public thinks that it's the biggest solution, but when you talk to the brains
of
the industry, they don't seem as adamant.
No, I don't remember if it was on Bloomberg or CNBC or somewhere. I was reading an article on, that exact problem and researching Deep Yellow.
Yeah.
And so for starters, a lot of these renewable sources, they are significantly further from the actual utilization source. So, you're going to have them like 100 miles away from, the town that's going to be fueling and powering. Like, nobody wants to see a fucking windmill in their backyard. I don't want to, certainly. And if you drive up and down the countryside in Ireland, I did a trip out there back in 19, and it's like, I'm looking at this beautiful, mountain ridge, and then there's a fucking windmill in the background. It's like, cool. That looks great. That's exactly why I came to Ireland, to see a giant wind turbine.
Yeah.
But, just thinking about that, how much power is lost between transit from... Like, you have stranded power, essentially. And not only that, you also have the intermittency in the power. So, as the grid stands right now, and I actually wrote about this in my articles for Quanta Services and Argon, you can find both of those on the Substack. And I'll probably have to do an update article on each of them, and we can discuss them on the podcast. But the article I read recently was that we need to completely redevelop the grid to the point where, power cables, transmission cables, even substations just need to be completely modernized to where, what was it? We need so many power cables that we can wrap the earth around, like, what was it, 3 or 4 times? It's just some stupid, ridiculous number, but it's so true because the grid as it stands was not made to support intermittent energy. Like, you're literally talking about jolts of power going through, and when compared to fossil fuels, which are a constant stream. And your engineer buddies, they can explain this a lot better than me, but it just stresses out the substations, and it's just not designed for that.
Right. And even when you incorporate batteries or something, I remember Elon for a while was talking about making bus-sized batteries.
Oh, that's small for... So, like, iron batteries, those are like container ship size.
Oh, really?
Okay, maybe not that big, but we're talking about like an office building size battery. Those iron oxide batteries.
Really?
Because, it's just insane how many resources are being allocated to technology that we don't even need. Like, we have all this clean energy.
It's wild.
And we're investing so much money into stuff. It's like, we don't need it. We want it. It's like a need and a want. We don't really need it.
Well, it's a bunch of fear-mongering from environmentalists.
Yeah, it's fear-mongering.
Yeah, for sure.
Natural gas is so energy efficient. It's so clean. Hank Hill and Hank Hill's big thing was propane is a clean burning fuel. King of the Hill. It's like, it really is though.
Yeah.
It's one of the cleanest burning fuels out there. And for people to think because it's a fossil fuel, it's scary, it lights on fire, that it's environmentally damaging. It's like...
You know what? I also do want to point out, because I don't think we've mentioned it on the podcast, but I was doing some live debates on TikTok, which I don't do much of anymore, but one of the things that came across was someone was arguing with me saying that we could put windmills in the water.
Oh, yeah.
And why don't we just do that? And I gotta say, with all the issues that we these environmentalists are all worried about, the overfishing and damage that we're doing to the oceanic ecosystem, and then they're like, oh, let's put these giant windmills in there, and fish swimming through them and just get cut in half. It's like decimating wildlife populations. But when it's for the purpose of saving the planet, I guess you just kill off humans, just kill off animals, just who cares?
Some's got to be killed off.
Yeah.
Might as well make it them.
And then put all them in the dumps, and then it's like, it is a complete cognitive disassociation to just be like, just to justify whatever nonsense you want to spew out and just ignore any of the contrary facts. It's astounding to witness, like.
Oh, yeah, absolutely. And
real life human beings fall into this trap.
I think I read that whales are, having issues sleeping and dying off because of the windmill. It's like how
Yeah, that's
goats
true.
are
It's another one. Yeah.
dying of exhaustion from land windmills.
Yes,
know?
I heard that too, which I thought was wild.
Yeah.
Yeah.
And if you think about it, what's better to kill off? Is it better to harm the environment? The oceanic currents, I don't know a whole lot about this other than what's in pop culture. The currents can affect the weather significantly. Watching, what's that movie, 2012 or whatever?
Oh yeah.
But it's like, okay, there's this perception that the oceanic currents can affect the weather and create superstorms.
Right.
So let's just disrupt them with renewable energy, because renewable energy is going to help the environment. Let's deforest the fucking trees so we can build windmills and solar farms. But, we're going to take out the stuff that actually naturally absorbs the CO2 and make something that's going to, cause a shit ton of CO2 to enter the atmosphere by mining these resources. And then, we'll figure out from there. It's like...
It's so absolutely...
Dude, it's money and power.
Backwards.
It's all money and power.
What? It's...
Who's getting paid? Who's getting the kickbacks?
True. Yeah, there probably is some sort of...
Yeah.
No, I also think it's a... I don't... It's a level of virtue signaling that is...
Oh, it absolutely is.
Bordering on, I don't know what it is. Is it power? Is it just like notoriety?
It's money, power,
or
notoriety?
Yeah, just to feel good, to pat yourself on the back. I'm a good person. BlackRock is, pitching. I mean, they're the main advocate for the ESG, am I right?
Didn't they just shut down their last ESG portfolio too? If I remember correct.
Probably because they were afraid of getting sued, because I'm pretty sure
yeah.
they're close to getting sued.
Yeah, one of those big shops, they actually just closed down their last ESG portfolio. I mean, if you look at the cost and performance, you're paying what, like 1.5–2% just in fees alone for lackluster performance. It's like...
Yeah, it's wild.
Yeah, and I'm over here sitting on energy stocks that are paying me like 5 to 10% in dividends alone, net of capital gains, and it's like, I take that over a speculative technology that produces barely any energy. The EREI is just absolutely atrocious. I'll take the dirty fuel and capitalize on that any fucking day.
Dirty fuel.
Dirty fuel.
Yeah, dirty fuel.
I'm from Texas. I will never believe the oil and gas industry is a dirty fuel. I'm from Houston. We are the energy capital of the world.
All right, so let's...
to wrap up with a bow.
Yeah, let's go... Well, let's talk about... Deep Yellow Limited, where the stock currently stands. I don't know if you touched on...
I did a valuation analysis. So because they don't earn any money, being a value investor, I had to switch hats and be a growth investor, be a speculative investor. I'm willing to change sides for a day for money. I'm joking. But so based on future cash flow performance, I put a pretty high discount rate on them just because it's still in early stages. So, I did the standard. My initial standard was it's similar to how you would value oil and gas assets with a PV10, present value 10% discount. I did the same analysis for Deep Yellow, and it came out to be about 2.25 per share on a present value of future cash flows. It's a bit high, just given where their shares sit right now. Do we have a chart pulled up for them? I think they've been running up maybe...
For Deep Yellow?
Yeah, Deep Yellow. Where are they at currently? About 80 cents or so?
86 cents, yeah.
86 cents. So I adjusted my risk metrics, gave them a 16% discount, just adjusting for, speculation. It might get pushed back further, or their production might get pushed back further. And, that came out to more of the industry average, the analyst average, about $1.05 per share, which, from an investment perspective, since riding it, that was a 20% upside. If they do go up to 2.25, that's 155, 1.5 times upside.
What does the industry average usually sit at?
or for I was just looking at consensus
Okay.
analysis. So they were one of the few companies that actually have their analysts reports on their website, which I didn't use. I mean, I looked at it to see if I was kind of going in the right direction after I did my analysis, and looking at their pricing models, I was pretty well within the average. So I guess I
Okay.
did it right.
Yeah.
But yeah, so I valued them 16% discount on their future cash flows at $1.05.
Okay. All
And
right.
yeah, I
$1.05.
think that gives you a nice little bit of cushion for some capital gains near term. And again, they're not going to be bringing the mine into production until 2026. Management was adamant about keeping that production target, even with the revaluation of their minerals, which pushes back the further approvals to begin mining. So, I think that gives us plenty of cushion for potential standstill in the stock until these events start occurring.
Man, there's one thing this stock doesn't seem to do though: is stand still.
Oh yeah,
I mean, if you're holding this year, you bought. I mean, you're up over 100%. If you bought in April right now, you're up 120% already, and that's a pretty good momentum. I do want to say the TTM squeeze is kind of rolling over here, but the RSI is staying strong. What is this market cap currently at?
let's see. I don't think I have that note right in front of me. I think they were somewhere in like 500, 600 mil. They're not too big.
Okay.
What's that these days? A micro cap?
Yeah.
Yeah, so they're still a pretty small firm, but it has a lot of future potential. Is where I'm trying to get out. With
Yes.
them. And
I mean, I would say nuclear is still kind of like a toddler industry.
it really is.
Yeah.
It has a lot of potential, but
Yeah.
it's had a lot of potential for 60 years
Right.
or longer actually. So it's still one of those industries that hasn't exactly caught on due to those few public perceptions, few incidences, but on a holistic basis, based on incidences occurred and the total, I guess, landscape of the total industry as a whole, I mean, it has one of the best safety records on the market. Like, there's hardly anybody's been injured, killed through accidents in nuclear facilities. I mean, the safety standards are so ridiculously stringent in this industry. It's just egregious to think about how negatively perceived it is. But yeah, I think it has a pretty big potential to see a lot of value. I mean, I will caution on adding a position in the company early on, just given how early stages they are. They do have cash to cover expenses. I think I put down like 2.5 years until production, and they don't have any debt on the balance sheet, which super appealing. I mean, they could leverage it up a little bit. That's not necessarily a bad thing. But as they stand now, they don't have any debt on the balance sheet, so it's all funded by equity raise and investments. So one word of caution in making an early investment in the firm is that, again, they have about 2.5 cash burn, and they aren't anticipating production until 2026. So in the instance of them needing to raise cash, again, it can be going to the debt markets. It could be an additional equity raise. So your shares could potentially get diluted. Yeah.
Which is very, very likely.
So I'd just be cautious on a speculative company like this. It's burned a lot of people in the LNG market for Tellurian, which is still awaiting approval and breaking ground on building their export facility for the last God knows how long, but hopefully they can turn that around. I own some shares in that as a speculative play for the LNG export market, which hasn't been playing out to my advantage at all, but I'm still hopeful. Same with Deep Yellow. I'm hopeful that we can get over that hurdle, get over that hump, and ideally they can see some gangbuster earnings and really make their impact on the market.
Yeah, and I think just in uranium in general. It's going to look really interesting for the next few years. So, I think that's, we kind of went deep on a few different things. Covered a lot of different topics.
Covered all the cool parts of energy. Covered natural gas, covered nuclear, covered renewables.
Yeah.
We kind of got it all.
Yeah, that was pretty good. All right, everyone, if you enjoyed the podcast, please leave a like, subscribe to the channel. Remember that you need to go check out the Peach Pit. Link will be down in the description. Check out my personal channel and join the Discord where you could talk to both of us. I hope you enjoyed this in-person podcast. Maybe in the future we'll have an actual studio kind of in the works. So we'll give out some future announcements on that. Maybe do more of these in person, and I would like to even fly out to some of these guys.
Oh, yeah.
Can you imagine doing an in-person podcast with Tony Guerrero?
Oh, that would be phenomenal.
That would be amazing.
Go to some industry conferences, meet some experts, engineers, people that are actually doing this on a day-to-day, and
that would be fantastic. Maybe in the future, in the
future development of the Gains and Growth podcast.
Yeah.
We'll see it happen.
Yeah, and Deep Yellow Limited, reach out to us to do some advertising for you. Obviously, we're big fans. Other nuclear companies sponsor us. I'm just kidding.
I'm not going to say no to sponsorship money. I just want to make it apparent that that does not give you the golden ticket for a buy recommendation.
Ever.
Never, ever. I'm going to remain biased and independent throughout the days of my life. So if I do write a negative review, don't come and kill me. Don't send the Clintons after me.
Awesome. Thank you all for watching. Check out those links, and we love you guys. Thanks. I hope you found this helpful.
We'll see y'all next time.
Yep.